Okay, continue. So my presentation won't be, making you as much laugh as Rowan has done, but I'll still do my best to make you laugh in between if possible. So my name is Sumit, and I'm one of the director of Property Expert Academy. Right, so that's me. Let me reduce this screen size here because I can't see myself, my screen as. Okay. So welcome to this investment in property, UK properties. That's myself, Sumit Gupta. These are some of my designations. I'm an investor, surveyor, author, trainer, mentor, and speaker. Property Expert Academy is one of my training academy. And by profession, I'm a property surveyor. So I also have a surveying practice called Global Property Consulting. And I'm a RICS registered valuer. So let's start. So basically, let's keep our phone on silent and avoid any distractions. So maybe literally not do like this. So you don't have to stick to your children to the wall like this with duct tape. But message here is like basically anything that is distracting you, keep your mobile phone on silent, take a notepad and then pen with you so that you can make as many notes as possible and ask me your questions at the end if you need. So Vivek, if you can help me to open this audience poll, so we know which audience we are currently addressing today, so that I can really do my best to. Here is basically is to know how many of the people already investing in property, or they have a buy-to-let properties experience, they are new, or what level they are at, so that I can address the presentation according to the majority of the peoples, but of course, considering everyone's benefit and interest in mind. Okay, so while the poll is going on, I'll move. Okay, great, thanks. So I can see majority of the people,
people have no properties. 55% have on this group. I have got one property.
Right.
46% have 2 to 4. Only one has got 5 to 7, and nobody more than that. Commercial property, 97% have none. Only one person has got 5%, more than one.
Oh.
One property commercial. And would you like to own a few properties in the UK? The answer is 86% want to.
So you are in the right room then, or I'm in the right room then. Let's understand some facts and figures. So based on the US research, they've found out that, people at age 65 or above, they are either dead or dead broke. So their research shows that 1% are considered rich above that age. 4% of that above that age are considered comfortable. So they're living comfortable life, but not rich. 5% are still working in a job because perhaps they need more money to even work at that stage. And 50% needs government or family support after the age. And 34% of that brackets are already dead. The numbers are similar in UK as well. So if you see, there are 2.5 million people are aged 50 or over. They are mostly living in London. And out of this, 1.1 millions are aged over 65. And this is projected to be increased by 86% in the next 30 years. So, what I'm trying to say here is basically, if you are relying on the pension money, then it's not going to last long. Or like we all know that how the pension used to work in past, it won't be really enough for us to get enough support when we are over 60 or 65 years. Now, here are some, research, or these are the graph that I've taken from a land registry. Based on the complete UK average house price. Even London one is slightly higher than this, but this is based on UK. If you look at it, there was many downfalls that came. Like we had 1990s housing crash, then we have 2008 financial crisis, then we also now in Brexit and COVID-19. But if you see, regardless of anything, the graph of the properties has always gone up in a long run. There may be few dip, but then it goes up again. And the best time is whenever there's a dip is the really time to enter. So now, let me give you some more facts. Approx 90% of the world's millionaire invest in property. So if you see, whether that's their main first source of income or multiple source of income, the property is within their one of the source of income. So let's say if somebody is like a millionaire, he may be using property as one of the investment vehicle. Of course, you won't find any millionaire living with still with their mom and dad. So they need basically their own home at least. And then, like since I'm a RSS registered valuer, we come across with all of this, research and the news. So being a RSS registered valuer, we play a very, important role where we basically value the assets which are linked with the real estate. And they say that around 2/3 of the world's wealth is invested in real estate, either directly or indirectly. Indirectly means like either construction industries or like, let's say, uh, iron, cements, and the other material, woods, all that is used indirectly is also classed under real estate. So 2/3 is still like really a huge amount of wealth what is invested in real estate. Also now, this is also very interesting to note. Many biggest, the richest people in the world, like Jeff Bezos, or even, like you name many other like Lord Sugar, Richard Branson, even let's say Donald Trump, right? They all come from a real estate background, and they all have a huge amount of real estate. Even this Jeff Bezos, he's got around 420,000 acres of land in US. I mean, in case if you are not aware what is 1 acre, 1 acre is 43,560 square feet. So multiply 43,560 square feet by 420,000 acres. Then you will know how much square footage he owns there. So he's also, I mean, so of course they have developed a lot of profit by investing in real estate. Now, there are some property news that let's understand where we are now and what's going on in the market. So currently, as we know that, this current pandemic, there is a lot of uncertainties. And, uncertainty is the time when people should be looking to invest. As Warren Buffett says, be fearful when everybody is greedy and be greedy when everyone else is fearful. So this is a time when, a lot of things are uncertain and you can really get the bargain that you were not able to get otherwise. Now, if you are familiar, there are a new PD law that government has came up in September 2020. In that September 2020, the government came up with this new law where you can convert lot of commercial properties under permitted development into something more useful. Now, what happens is, because of course, as we mentioned, the real estate plays a huge role in any economy. And when you basically, government always try to, safeguard the real estate part of it. Otherwise, if the real estate struggle, the whole economy will be struggling as well. So they came up with this idea that, a lot of properties now you can convert from commercial to residential or from class A to class B, various classes. We may probably go more in detail, but what that do is that opens up a lot of opportunities now for an investor to come and then creatively use those strategies, and they won't last for long. So this is the best time, to use those strategies, and simply rather than applying for formal planning permission, you can simply change them. Now, the stored value investment, I mean, property is one of the investment where you can really store your assets. Now, let me explain a little bit more what it means. What government did is, after all this pandemic, that lockdown 1, lockdown 2, and now 3. So government has to print the money to, bail out and also help all those people out. Even the analysts saying that by next year, it could be like 1 trillion. People might, so the government may print 1 trillion of UK fiat currency, that's called, the currency which we are using. So what does that mean is, imagine if basically, your house price is X amount now. If the extra money that printed, what will happen? The purchasing power of the money. You may not realize the money which is lying in your bank account, although you may not do anything to it, but it will lose its own value over a period of time because of inflation's going up, all this money which will get printed. And that's why people feel, oh, the property price is going up. But it's not only that. Of course, that's going up for many reasons. But one of the other reason is also, if the government prints a lot of money, what's going to happen? Everything will start looking expensive for you. You will find, oh, real estate is expensive. The things that you're buying is getting expensive. Why? Because it's not just the price of the product, but is the purchasing power of the money that you're using is reducing over a period of time. So imagine if the government by next year, if they print 1 trillion, what will happen? So that's why you need to invest your money into something where you can store it value. That's why you will see the price of the property going up. The share market is going up. The Bitcoins, cryptocurrency, why are they going up? Because Bitcoin is classed as one of the best, vehicle to store your value. And that's why you see Bitcoins even had touched recently 30,000. Now is at 24 something, right? So you see these things are happening because of many factors. And that's what we have to understand. Unless we understand the money, understanding something else or investment is the second part. So that's what I wanted to say here. And also we all are aware that in UK, housing markets are in shortage. We will always need more and more properties. The demand is more than the supply that we have. Therefore, of course, there is a opportunity to see why we should invest in this crisis. So now let me ask you this question. Where are you in your journey today? Are you probably, in your 9 to 5 job, or thinking maybe started a business thinking that, you might probably have a financial freedom, but then you did not basically expect, what you expected, you did not get that much time. In fact, by running your business, you got even more busier than what you were doing in your job, right? Or perhaps you are busy in your whatever day-to-day life, your household work, your maybe housewife or something that, or you're doing something that you are not even aware that something else is also possible. Imagine if your life is where you can really live on your own term. You can buy the best house, best property that's possible. You can go for a holiday 4 or 5 times in a year. You can really say to no to anything that you prefer, you don't want to do. Right? So, or you can spend your time with your loved one. So, in order to bring your position from A, where you are now, and where you want to be, creating like something financially free, that need some vehicle to bridge that gap. And what's that vehicle is? You invest and build fortune for yourself. Now, before we go through more in, like why we should invest and all, let us first understand, like the thing is, we call it why is more important than how. When your why, your deep desire, why is very clear, you will figure out how you will do that. Somehow you will find that solution. So they say, anything that comes in this world first manifest in our mind. So the dream comes first, or like something that you basically think about it comes first. So this first, let's understand what is this first. F stand for freedom. You may have this deep desire that I want a freedom. It's enough of working for 9 to 5, enough of whatever I've done in my life. I really don't want my next 5 to 10 years or rest of my life to be like what I'm doing currently. Right? So freedom is one of the main why factor could be that you really want that in your life, very deep desire. Second is property could be, you may not be very much, fancy about having 5, 10, 20 property, but you would be, of course, like to have what money can do, the income that comes from property. You probably will just be interested in having that income from the property. Mostly many people have the same, like regardless of whether they have 5, 10, 20 property, all they want is the income that can come and improve their lifestyle. And then whatever they like to do, they can do with that money. And some people invest in property maybe to have their retirement plan. Because of course, as I mentioned, pensions and all those other, the investment categories that people were previously thinking will be enough for their retirement is not enough. And now, there are many things that are available. Even you can use your pension fund to buy properties. So you can regulate, you can control your pension fund to really let it grow on your own, management basis. So you can control your self investment or pension plan. There is something specifically we may discuss later, but that you can also think of that, how can, if I have a pension plan, how can I use that into there is, of course, you can't directly invest in in a house to buy, but of course there is a way to buy real estate. We may discuss that. But then retirement plan is one of them. And also people need somewhere they can secure their funds. So property is one of the best asset class or secure asset class, I say. Like say, for example, if I also invest in shares, cryptocurrencies and all, and I've made money in there as well. But I still feel that, regardless of how confident I am in the share or in that cryptocurrency, I can't really put all of my money into that, right? But real estate is something which, if I know that I'm getting money, I will be completely going and put all the funds that I can really generate to invest in property. So this is one of the secure assets class as well. And also this is the tool where you can really achieve a lot of things, because property is one of the base that can open up a lot of doors. So let's say tomorrow, if you want to really start up a big scale of real estate business, you can list in a stock exchange. A lot of people are nowadays offering cryptocurrency. We are working on that as well, the cryptocurrency which are backed by the real estate, so people have some sort of security behind the scenes. So these tools will open up once you start investing in property. So now let's understand who am I? Who am I to talk about all of this? So I'll be very quickly, I'll share a little bit about me. So if you were with me in 2004 November, you would have seen me, coming to the home. It was midday, like dark night at 11. My father was sitting on a sofa. I still remember the day, and he asked me, son, where were you? I mean, he was of course asking me this in Hindi, but I said, he was saying, son, where were you? And I was just thinking, what do I tell him? How will he react? So I told, I said, Dad, I went to this webinar. They were teaching dream big, become rich, earn and learn in UK. So my dad said, oh, they are all like crook. They just basically want to make money. They will not, do. They just want their money. So I said, no, Dad, that looks very appealing. They're teaching, I can go to London and I can really do this. And, they were teaching that people who are not even educated are doing really well. So at least I'm even better than them. My dad said, no, we are middle class people. We can't really think like them. Just eat. I mean, so he told me in Hindi, I'll tell you. He said, roti kha aur so ja. I said, no, Dad, but he said, shut up, end of the, argument. And he said, go and sleep. I don't have anyways any money to give you. So basically I thought, okay, I sat with heavy heart that night. And I was thinking, no, I really have to do something to really, make this dream come true, like to go to London and study there and then also learn and earn. So, I mean, next day morning, then I came up. So just to cut the whole story short, with few efforts of after a few months, I made this impossible looking thing possible. And I found myself coming to UK in a flight. And while I was in the flight, of course, I had to borrow some money from banks and some people to come to this country. So when I was in the flight, after paying flight ticket and all those fees and everything, I was just counting whatever money I had in my hand. How many days can I survive if I don't get a job as soon as I come to London? So that money was not enough. So literally, like first few months when I came to this country, I was only able to eat one time a meal. So couldn't afford even two time of meals as well a day. I did some odd job, KFCs and all those casinos and all, until I found a proper job in a real estate company where I started, studying more and then becoming, and now I've got 5 certified qualifications in real estate. So that's what I was doing those days. But then you remember this time came in 2008 when this financial crisis came. Everyone, I mean, a lot of employers were cutting their, wages, or they were sacking their staff. So I had the similar threat. And then that night I was just basically at, I was with a heavy heart. I was thinking and asking myself this question. I mean, what did I do? Have I done something wrong to come to this country? Shall I go back to India or stay here? And I was tossing and turning whole night and asking this question to myself. Shall I stay here, go back, stay here, go back? And then in the morning, I basically sat with a heavy heart to do a meditation. I used to only do meditation those days when I used to get upset or like, something stress, not like regular as I am now. So I sat in the morning and I was doing this meditation and asking this question to myself, shall I go back home? What shall I do now? And what will happen? So my Gurudev Sri Sri Ravi Shankar came in my, in my meditation. And then he said, son, it's not about the country, it's about you. If you really want to do something big, better and different in your life, you got to do things differently. So I sat down and I thought, okay, what am I good at? And what can I do really? So I worked out, okay, I studied chartered accountancy. So I'm good in finance, tax planning. They said, okay, I've studied surveying. I'm good in understanding building from foundation to the roof. And I've studied property law. I've fought over hundreds of cases in court, tribunal, high court, and land chamber. So I thought, okay, why don't I just use all these skills and then help investor clients, which I was doing anyways, and charge them some fee for negotiating deals, bringing them the property deals. So I started doing that, and then slowly, I started helping and making them millionaires. And then I thought, maybe I'm really doing all the hard work and they're making millions. I'm only charging a small fee. So I thought, maybe now next time onwards, whenever I do a deal where I'm getting them a below market value, or some deal where there are huge development potential, rather than asking them a fee, I'll ask them to either give me share in profit or equity in a property. So this is how I strike a deal, and I have worked with many investors like that. And soon, within just 18 months, I found myself becoming a financially free, having multi-million pound of worth of property portfolio with none of my own money, because I helped enough people that has achieved helped me to gain what I wanted. And then people, after I shared this story with people, they said, "Okay, Sumit, that's really nice. Can you share us? Can you teach us how did you do that?" So I thought, okay, yes. So I started teaching people, and then people got even more impressed. So I started, writing books. So now I've written half a dozen of books as well. And so after that, I thought, maybe people who can't really come to my workshop of 3 days or 12 months of mentoring, they can at least, learn from my books, because there's a harder way how I've come where I've reached, and smart people can really learn from other people's mistake. So then I wrote all of these books. So these are some of my qualifications. And soon, day after day, I was getting better and better, and start running one after other businesses and all. So this is property investors, surveyor, author, mentor. And although I'm a surveyor, but I do a lot more than what one can expect from a property surveyor. So I do a lot of consultancy, I write books, mentoring, and also I speak. Here are some of my books. So this is the ultimate guide to property investment, where I will explain about 10 best property investment strategies that has helped people making millions of pounds using those strategies. And these books are available on Amazon. I'll send you the link as well later on if you need. And this is another book which is basic. So the first book you can use anywhere in the world, because this strategy works, the negotiation skills works, the all those things that I've taught, like resources, teamwork, and everything. It works. It applies anywhere. But the guide to commercial property conversion, I'm now launching anyways, that this book is mainly for the UK property. So in case if you're only investing in UK and considering investing in commercial, then this is the good book for you. Um, Also, this is another book of mine, The Money, How to Make, Manage, Master, and Maximize Money. So basically, this is the blend of little bit of spirituality. As some of you know, I'm also art of living teacher. So I do teach some spirituality, and also I blended that with my business skills in this book. So you get like a flavor of both. And this is our third edition, because post COVID-19, there is some new law which came, as I mentioned. So this is upcoming book launching on 31st of Jan. So this book is available on Amazon as well. I'll send that link. So let's go without going. These are some of my other business. Global Property Consulting is a surveying practice, as I mentioned. Property Solution Company is the company that finds solution for any property investors, and we source properties for our clients. And Success Resources Venture is basically the comprehensive training academy, where we teach all the other, even property, as well as the other like forex, book writing, public speaking, and so many other things. Now you may be asking, okay, but why is it the right time to invest now? So let's understand. So number one, you're living in an information age. Like nowadays, getting any information is much easier than ever before. You can really go on online and even get some subscription, and then get the desired property, the desired result of whatever you like to do nowadays, whether networking with somebody, JV. There are many groups on Facebook, Instagram, LinkedIn. You can really get along with like-minded people so easily, not as you used to do before. So like you will find even plenty of groups, I mean thousands of groups on Facebook, where people are really only talking about properties or whichever field you're good at. You can just join those groups. That's one of the main reason. Other is, reaching people is so easy now. Like you can really message people on the Instagram, Facebook, and all the social media, WhatsApp, create a group, and also even do some commercial promotions, which is much easier now. Like there was a time when you do an ad on Twitter, Facebook, and all used to cost a lot. Now it only cost few pence per lead, basically, and you can reach out just by spending some money to millions of people so easily. And doing business in this century, as you know, is easier than ever before, because now you are full with a lot of resources. I mean, in past, I know how hard it was to, start doing a business, even advertising in a newspaper and all. But nowadays, so many options are available for you. Doing business, so many helps, books are available, trainings are available. You can do a lot more. As I mentioned, the trainings are available. You can find the trainers, learn from them, and the interest rate is the lowest. And I mean, we can't really, I mean, imagine, like, say if you go 10, 20 years back, later on, I mean, in future, you will ask yourself, oh, I mean, maybe your kids or children will ask you, dad, what did you do? Really, the interest rate was only 0.1%. Why didn't you take any advantage that time? They will be asking question like this. So make sure that you don't lose this opportunity. Now what we have done is, based on this, so let's come to this learning part of it. I mean, this is a 6R, so it's not like a South Indian movie, not triple R and all. So all based on my 20 years of experience in property and finance, I decided to design a program where people can learn all about property. Anybody who is even fresher can really start their journey in the real estate. So the first R stand for the real estate. We'll go more in detail as well. What are these in details? Second R stand for research. So you basically research about the property. Third is the resource. I'm going a little faster because I'm going to go later on more in detail. So you do resources. How will you buy those properties? And then how you restructure the properties. How do you find the finances for those properties? And how do you really make profit or resell them and take your exit? So this is my model, the expert property investment program that I designed based on like 20 years of experience. And after interviewing even hundreds of successful property investors, what they have done, what we have done, and our students have done. So here's one, the real estate. So in this one, we have a golden goose purchase plan. So here we teach you all those strategies that you would need. The best strategies that has made millions of pounds for the investors. And let's say, for example, if you're a doctor and you do not have much time, you need to see whether you should be going into strategies called HMO or service accommodation, holiday let, because all those strategies may need time unless you have somebody who can handle it for you. Those strategies are, I mean, so you need to work out, okay, what strategies in my current situation will work for me. And there could be like a standard one where you want to go in a standard buy to let. And there's one more strategy I'll be going more in detail later on in this slide. So we'll discuss like how you can really plan your property investment business. So treat it as a business and it will be like one. So you give like this whole property investment complete focus as if you're running a business. You make your whole plan that this is what I like to do in the next 5 years or next 10 years, or then you break them down into few small goal plans. So let's say this is what I will be doing in 1 year, this is what I'll be doing in 3 months. So for example, let me give you a quick example. Let's say, for example, if your target is to buy, let's say, a couple of properties, let's say 2 property in a year, right? So you might break it down. Okay, in order to buy, let's say, 2 properties, I mean, there are some research, so you can always check. So let's say when you view 100 properties, you shortlist 10. Out of you shortlist 10, you will buy one, right? So now you got an idea. In order to buy one property, I need to view 100 and shortlist 10, then I'll get one. So if I need to get 2 property, how many property you need to view? 200, isn't it? Now, if you need to view 200 properties, then you need to split that plan. I'll say, okay, fine. Or every week I'll be viewing 4 properties or 5 properties, depends on that. Yeah. Then you can split that. Okay, if I'll view 4 property a week, that will allow me to view 200 properties plus in a year. That will help me to get 2 properties or 3 properties, depends how you good you are. Because sometimes your average, when you start going fast, more and more, you will become more efficient and you can even acquire more property by viewing less. And even this is one thing they say, even if you have not much idea or you're very much fresher, imagine you start viewing properties and by the time you reach like 20-30 property you've seen, you yourself will get a lot of idea and understanding what is really good, what is the right value in the area, what are the things I need to look at, and everything. Soon you will start going more in details. Yeah. Then all you do is once you've done, you do your research. So this is another than the system that we designed. It's sound due diligence system. So we need to then look at many things in property. You look at, what are the legislation around it, whether it's a leasehold properties, or whether what are the searches suggesting, is there any charge on those properties, how to look at this. So we go more in details in that program as well, but here are just touching few overview of it, and then of course we'll go more in detail in one of those strategies later. So then the second thing you do is, after you've done that, you do your research, due diligence, and then of course you need a fund. So you need to have a resources, and there's a flexible funding formula. So it's not only traditional way of buying property. We'll go into more detail in terms of taking some examples how it will impact when you buy property with a traditional style, like 25% deposit and 75% loan, or when you buy smartly in a different way, how that impact on your property portfolio. So there are many ways how you can really fund your property deal. It's not just thinking about borrowing money from the bank. It could be other people's money, your friends' money, crowdfunding, and many other options that are available that can help you to buy property. We need to just think outside the box. Then you got to restructure, because whatever you are doing, you basically increase the profit by doing the process. Because imagine, in the property game is basically you are getting paid for solving someone's problem. So the more problem you solve, the more money you make. And then when you start solving problems, you start making money for yourself. So let's say, for example, in this, basically this is a full formula, by the way. So this PROFIT has a meaning in it. For example, P stands for planning. Now what we do is, we buy properties and then we go apply for a planning, and then when we get a planning gain, without even physically touching a property, we have increased its value. Likewise, this ROFIT, they all have a meaning behind it, and that's a whole process. Of course, like as I mentioned, this is like 20 years of my experience and everything. Explaining in just a couple of hours is really next to impossible, but we go through this on a workshop more in detail. But I'll take some information later on in the process, in the second half of the session. I think we still go, right? Okay, so then the refinancing. So now what happens once, let's say you bought a property, now you got to refinance as well, right? In order to take your money out. So you have various options. You recover or reuse this cash converter. We may be going into more detail on how we implement that cash converter so that we can really increase our property portfolio value. And then you resell and you exit from this deal, or you have this as a growth plan. So keep it in your property portfolio and keep building the assets further. So more on this formula later on, but let's understand one of the examples. So let's say this is one of our South London deal, which we did with one of our private client and investor. So this was just to understand, the property was in South London. We purchased, including all the cost, stamp duty, legal fees and all, was 535 roughly. And we got, our deposit was around 150 on this property. Rest of the money, bank loan, was 385. We spent money about 75,000 pounds. I'll show you what we convert this house into. 75. So basically we split into two. I'll show you some pictures as well. So if you see, I think my cursor here. So we basically have split this house like literally into two halves, creating two houses, which was revalued for refinance purpose at 880. So the complete gain after what we deposit was 150, 75, 225. We made 270, around 120% return in just 1 year plus. Because of course we were quite content, because we were letting the property out while we were waiting for planning permission. So we did this under full planning permission. So now here are some pictures. So, but of course you see this return, 120%. It's amazing, isn't it? Like, where will you get this sort of return? That is secure return. Imagine, even if we would not get a planning, the house itself was worth more. Plus, even if we use it as an HMO, being an HMO, just as an HMO, you will really make more money while even keeping this house. So you will make money in both cases. Only fluctuation that happens is in your profit margin. Your principal amount is always safeguarded. And that's why I like, the property so much, that at least your principles are always saved as long as you know how to really invest in property.
What's HMO, Sumit? What is it?
HMO is a house of multiple occupation. So basically what you do in that, let me explain again. Sorry, the slide was frozen before. So what you do is in this house, we had basically 6 rooms. So this, if you see my cursor on this complete building, all those 6 rooms you let room by room, and that gives you more money than just letting it to one single family, because sometimes it's difficult to find one single family who will rent it like 6-bedroom house from you. So that basically help you to increase your cash flow. Now here is the other picture. So all we have done, simply just look at it. The building was already there. We just got a planning permission to go further back by 4 meters. Just simply we went under 4 meters. This is just like some of the sample what kitchen looked like. So we basically fitted a kitchen and diner here. And then we sliced that house into 2 pieces, opened up from the side, and we got simply 2 houses from one house. And straightforward 120% return just about in 1 year time. Now let's go. So another thing that you will need is, maybe going a little faster here, power team. You know, the power team really play a very important role. In order to buy properties, you need to have these professionals, right professionals. So you need a solicitor who can really do the job well. You need a good mortgage broker. Many times, you know, the deals that financially, I mean, they may be not good if you don't have a proper financial product with you. And some deal can be more viable if you have a right finance in place. You need a surveyor who can really help you in the whole project, check whether because property investment is considered as one of the sound investment you will ever make in your life. So it's always best to take a sound professional advice. You need a right accountant who can really do, tax planning, the portfolio structuring, so that you keep most of the money that you earn in your pocket rather than giving it to taxmen. Good architect really help here a lot, because you need a right architect who has an experience, who can convert the properties to the desired result that you're looking at, and many other, professionals that you would need. Now, important thing here is, like, imagine, let's say you're playing a cricket game. If you have a good team who is good in cricket, of course you will be winning in your game. But imagine if tomorrow, instead of cricket, you decide, okay, fine, now I want to play a football game, and you use the same team. Would you win in the football game? No, isn't it? So you need to have the right team who is specialized in that property strategies. We go more in detail on that. So of course, now, other than that, you also need a local team. So this power team can be anywhere. So if you're buying property in London, your solicitor could be in Manchester, or your mortgage broker could be anywhere in UK or anywhere, even outside. But the local team is like, your plumber, electrician, gas engineer. Because let's say if your tap needs fixing, your property is in London, you won't find, you won't get really a contractor from Manchester, right? So you need a local team. We go more in detail, like how to find. Maybe it's too much of talk, so little bit of joke time. So I've come across with one of these sites somewhere. So I thought, okay, eat here and get here. Get gas. Okay, so now I'll go into one of those strategies that we discussed, and why this strategy is important. It's called purchase lease option. I'll be going more in detail, like exactly explaining this. So this strategy is not very much new, but this is there for many, many years. Even many business owners, big people have used these strategies in acquiring businesses and many other assets class in their life. So some of the example, as I was saying, Donald Trump, if you know, he probably controlled the most of the Manhattan based on this strategy, because he comes, from the real, this real estate family. Also, like if you know, Lord Sugar, Richard Branson, and many other successful property investors, they also have used these strategies. So what is this purchase lease option? First, understand this exactly. What is purchase option? So purchase option is nothing but an option that gives you right to buy, but no obligation to buy at a fixed price at a certain period of time. So you might say, so when we apply this in a property field, we say, okay, I'll buy this house for, let's say, 500,000, and I'll have a contract that within 500,000, let's say within 3 to 5 years, whenever I'm ready, I'll buy this house for 500,000. So you have a fixed price and a certain period, which is fixed from the day one. Now let's understand basically what is then lease option. So you add lease to it, that becomes purchase lease option, which is in short called PLO. Many professional people would use this word. So purchase lease option is same, like with additional benefit that you are getting a rental as well. while you're controlling the property at the same time. So let's say the same house which you have now, previously you said, okay, 500,000 and I'll pay you in 3 years. Now you're saying, okay, you don't worry about your house, your mortgage and anything. I'll basically pay you X amount of money every month. And you are letting that property out because you've now got a control of the property as well. You're getting that property, letting that property out and getting extra money, earning from the money which you are not even owning currently. And this is quite good in this current climate. That's the reason I'm explaining this one, because now, regardless of wherever the market is going, because purchase lease option gives you a right to buy, but not the obligation. So for any reason, if you find the situations are not favorable, you can really give the property back, and whatever cash flow that you've made within that period of time, that's all yours. Now, what are the benefit? Why one should do this purchase lease option? Number one, you control the property, and the rental gain that you get from the property is yours. So for example, you got a property, let's say 500,000 property, and then you agreed with the landlord that, okay, I'll give you 1,000 pound, let's say for example, every month, and you're letting that property out for 1,500, for example. Then you're making that 500 in between, basically just simply controlling and managing that property for them, or for yourself, because you also have a right to buy it, right? And then of course this gives you a monthly income without even investing too much of the money in the beginning. And then this is very good when you feel that you may not probably have a large deposit sum to buy a property, but then you can really control a property like this, and later on, because situation will become favorable, then you may probably not even need a deposit to acquire this property. And that is really a very creative way of doing it. And mortgage wise also, sometimes people may not have a favorable mortgage condition now. Let's say for example, for any reason, people could have sometime, the salary is not enough, they have some dispute in their house where they can't really get a mortgage, but they can get in future. So this is good when they can really secure the deal for them, and then once they are in a position, they exercise their right, and then they get the money. And this, as I mentioned, is the best strategy in today's climate. Because a lot of, there is section 24 which makes a lot of landlord to sell their property. Now when they sell this property, of course there are somebody who would need, like, because if there are more people who want to buy, they want to offload their load, or because more property somebody has in their name, they will be not making enough same money what they were making before, because of this section, financial act, section 24, right? Now let's see now how would you really, one thing which is very important to look in this purchase lease option, the main criteria is that the owner who is selling the property does not need money straight away. So that's the only important thing, and there are many cases where this thing comes in play. Now also, other thing is some favorable mortgage situation is really important here. Let's say the vendor that you're dealing with, ensure that they have a low interest rate, so that because mostly all they want is like somebody to cover their mortgage based on the situation. And then also make sure that it's like a buy to let type mortgage, or convert it as buy to let type mortgage, and then it's interest only, so that your repayment is low, so your cash flow is more if the mortgage is low. And then of course you have like more terms left on the mortgage is better for you, because then you can exercise the right of option even in 5-10 years if the mortgage is for that long. And if there's no mortgage at all, that's really even amazing and fantastic. So you're laughing all the way. Now, how will you use this application? How would you use this once you have taken a purchase lease option on a property? What are you going to do next? So now here are some options. You can use it for yourself. Let's say if you're a first-time buyer, this is the best way of acquiring a property without having too much of your money initially, without going and bothering about the mortgage. You just simply get a contract and then use it for yourself. Or you can exercise your rights, or whenever you're ready in future, as I mentioned, you can just say, okay, fine, Mr. Vendor, I'm ready, and here is the money, here's the bank finance ready. I want now the property to be transferred in my name. And then also you can probably, if you're an investor, you don't really want to use the property yourself, you can be in a between, like a sandwich. You can let out as a short hold tenancy, which is AST, HMO, house of multiple occupation, as a service accommodation, or holiday let. So you can do any of those. So you remain in between, and then you just basically let out, keep making money as long as you want to make. And another creative way you can do is you can sell it to somebody, a tenant buyer, somebody, let's say you found, who is not able to take a mortgage straight away. you can charge a deal packaging fee. You say, okay, fine, here is a deal ready for you. And they will pay. I mean, with my experience, I'll tell you like 10, 20, 30,000 pounds is very easily to charge somebody for this type of deals. You can split into few pieces so they can pay that to you over a period of time once they are exercising this rights. So that's like a pure money. One side you're tying a contract with a vendor, other side you're tying a contract with a tenant buyer. And then, as I mentioned, you can also do a deal packaging. Let's say if you are not really too much bothered about, you don't want to get involved into the whole thing, you can just simply sell it to somebody who is specialized into that field. You charge a fee, become a deal packager, and sell it to them. Also, this is the best way, let's say if you want to really take the whole portfolio of somebody might be, let's say I've got sometime inquiries coming like this, I'm a retiring landlord, I've got 10 properties portfolio or here, there. And it's the best way. You can just simply say, okay, fine, don't worry, you take a retirement, enjoy your life, we'll look after. And this is the best way, just taking the whole portfolio just in one deal, and your rest of the things are all settled, and other thing is, if you want really quickly flipping, you can just do a deal, stick it into the auction room, sell it in an auction, make your money, and then more deal you do like this, more money you can make. So within 1 year, you can probably do 12 deal, one every month. Now, why the options goods are good for you? Basically, it gives you good cash flow, equity, because the equity that you make, because imagine if you're making a contract, now you're saying I'll pay $500,000 in, let's say, 5 years time. The price is locked, time is locked. But in 5 years time, imagine how much that property would be worth in 5 years. That 500,000 pound worth of property. Remember, you've seen the graph in the beginning. On an average, real estate graphs goes double every 10 years. So let's say in 5 years, if it goes 50%, the 500,000 pound worth of property would be worth 750. So you're purely by holding and controlling an asset made 250,000 pound of equity in it. And that's how a lot of investors are making money, by simply creating these strategies. Imagine how come all of these people, Lord Sugar, Richard Branson, or all this Donald Trump and all, how did they become rich or build so big empire like this only? And you don't need to get a mortgage, not large deposit, and fast way to earn money. So even you don't have to really wait for all this money. You can just start simply learning the skills and then simply implementing them. And what happened in this field, there's less competition because most investors don't even know how to use them. Okay, and why is the right time now? If you see, as I mentioned, the lowest interest rate that we discussed about. So this is the time when the mortgages are low and your outpayment will be low as well. And it's uncertainty. And then uncertainty is the time, as I mentioned, Warren Buffett says, be fearful when everybody is greedy, and be greedy when everybody else is fearful. So this is the time when your people are uncertain, you get those deals, you do those, take some initiative and then build a fortune for yourself in future. And you will find that some landlord now wants to sell up because of the Section 24, because of many other issues, and of course their personal circumstances. So this is really a good time to get involved. And as I mentioned, there's not much competition in the field. Yeah. So Vivek, do we have enough time, or
we have a couple of minutes if you want to,
okay,
and then we can continue.
Okay, I'll go through them a little fast on this. So let's say this example which I showed before. Now, just to understand the financial part of it, why one should start thinking, investing creatively. What is this leverage and compound? So many times people feel, okay, I don't want to really borrow money. I just want to use, let's say if you have 100,000 pound, you want to invest 100,000 pound into a property, but then you say, I don't really want a headache of loan because I really want a more peace of mind for myself. But then see what happens. I'm going to show you 3 scenarios. What happens when you buy a property cash and when you buy with a mortgage. So in the scenario 1, let's say very quickly, imagine you have 100,000 pound, you bought a house, complete mortgage free, you are not bothered about taking mortgage, and let's say net rental yield after all this expense comes to 5%. Sometimes you can get 6, but let's say I'll keep it 5 because you got to pay some letting fee, management fee, or some insurance and everything else. So let's say net you get 5 for understanding. And as I mentioned in the past, that average housing price grows goes double almost in 10 years, but let's call it even 5% on an average. This is an average basis. So let's call it hypothecation basis that 5% on capital growth you are adding every year. So in this scenario one, if you buy a house, you're getting 5% rental yield and 5% in equity growth. So altogether you made 10,000, which is like 10% return you made by doing that way. Now let's put it this way. This is more creative way where you are now decided, okay, I'll go with the bank loan. Same 100,000 now can allow you to buy 4 houses or 4 properties rather than 1 property by, let's say, putting 25% deposit. I put like some numbers I've put just for a straight understanding purpose. There are some other, overheads and all, but let's call it that way, that to understand this 25% deposit when you're putting, you're borrowing 75 from the bank. Now, same, let's say if your rate of interest was 2.5%. So to give this, I've given like calculation here on what your annual cost of interest will be, because let's say if you're paying interest only, same 5% rental yield you're making. And after the mortgage payment, now you are making, instead of 5, you're making 3,125. Now return on capital employed, because now you only invested 25. So you're getting 12.5 instead of 5%, which was before. So overall now here, you made 4 times rental, you made 4 times growth on the property uplift, which is happening every year. Now, previously where you made 10, now you made 32,500. So imagine here what you got is, you got the 10,000 3 times more by just leveraging with bank money. And what important thing here, what investors should know is, this is indirectly deferring your tax liability, because anything that build, you're not really paying tax today. If you have built this growth of 20,000 in a property, effectively using the taxman's money until you are using and until you are selling this property, you are not paying tax, right? So this is another creative way how you can really increase your property portfolio over a period of time by using taxman's money. Now, this is even a smarter way. When you buy below market value, instead of 100, you're now paying 80. For example, let's say you've become more smart, and now instead of buying at 800, you're buying at 80, 20% smart. Of course, you have to do little more hard work here to get a below market value deal. But now, because my spreadsheet was small, so I've put only 4 here, but you can get now 5 properties with the same 100,000, because you're putting 20,000, 20,000, 20,000 each. Because when you're buying below market value, you would only need less money. So you bought now 5 houses. So just add 1 extra just for understanding purpose. Now, same equation, let's say now this time you buy 75%, you borrowed 60,000, 2.5% as a interest rate. Then you got 5% rental yield. You got mortgage after repayment, 3,500 on income. And then let's say, just I'll go very quickly at the end. This is based on 4 houses, but so remember that. So 32,875, add 25% here. So you got nearly 40,000 plus. From the same, when in scenario 1, you were making 10,000. In our scenario 2, you were making 32. In scenario 3, you're making 40 plus. But not only that, the important thing, what sometimes investor misses here, in the scenario 2, if you will buy that way, you will have to wait for a couple of years before the price of the property goes up, and then you can refinance. But here, even after 6 months, most of the lender will allow you to refinance. So because let's say you picked some property below market value, at instead of 100, you paid 80, you added some value as well. Let's say made it 120. Now you go back to the bank and say, Mr. Bank, now my property is worth 120. Can you borrow? Can I borrow 75%? They'll say yes. Why not? As long as, of course, rental and other things supports. You borrow 90,000. So effectively speaking, out of initially, so you got all your money back in your pocket, and you're using now bank's money to play for your future portfolio. And this is how many people are building their property portfolio using bank's money.
Sumit, what are the risks in this approach? Because obviously it feels uncomfortable to be leveraged out so much, right?
Yes, yeah. So now, I mean, normally I say, once you are educated in property, there's virtually no risk, because first of all, you're buying it 20% below market value. Instead of 100, you're paying 80. So 20% you made on day 1, right? And of course, to manage all of this, you need some skills, because they say you walk before you learn to walk. You know, like you swim before you learn to swim, right? You dive into it. Or you cycle before you learn to cycle. This is the same way. You may have to learn all of these skills. Otherwise, there is a risk for sure. But if you learn I mean, in last 20 years, we have not even lost a single pound. As I mentioned in the deal in past, what happens, the only fluctuation that happens in the profit margin. We never lose our capital growth. And that's the beauty about this asset class, because you can lose money in anything. You can lose money in share market, you can lose money in cryptocurrencies, or but you cannot lose once you know how to invest in property field, because this is a real asset. And that's why it's called real estate, because it's a real asset. Your principal remains same. So of course you need to learn skills, how to let, how to do proper research on the tenant, what type of tenant to buy. In fact, the book which I mentioned, we are launching on the commercial property conversion. There are some so on the property deal, when you do, so this is just example for a property I'm saying. But let's say this property was a commercial, then commercial properties are fully repairing and insuring. So once you have let, the whole burden of insuring, managing everything goes on to the tenant. That's even better. So I hope I answered your question. So yeah, we do run this 12 weeks of program, the expert property investment formula that I showed. Of course, Vivek will send you more details on that. So wait, I can see a lot of questions here. So Vivek, would you like to volunteer reading and then I can answer, or how would you prefer me to answer them?
I trust you must have read the questions already. You can
yes,
just.
I've read the questions, but there are plenty of them. Probably I can prepare the whole course on that. Because some of them are really very interesting and important question. And that's why, the role of this training and everything comes in play. Maybe I had a quick look on those. If you want me to read out, I can. I mean, if there's anything missing, do let me know. I'll tell you what I've seen. So there was one of the questions somebody was asking, is it good to invest in flat or house? Well, the answer to that is, in order to start, it could be still okay. You can have like an investment in flat and house, but there is a lot of things. That's why this education is very important. Like I tell sometimes people, if you can make the same amount of money with one commercial deal, then 10 residential houses, which one would you prefer to do? Yes, some of you might say, okay, one commercial, but then again, it needs some efforts, extra knowledge, education, and you need to upgrade yourself. Yeah, but then on the other end side, flat and house is still good to start with while you're learning. Many people have started by investing in residential, and that's the reason. I think Vivek might share a video for one of my latest upcoming book, which is on commercial property conversion. I think that also covers one of the person's question, which was saying, is commercial property a good thing to start with? Yes, definitely. And it's one of the good thing, because you have a lot of opportunity and new permitted law. All those permitted law will allow you to convert a lot of properties without even going through a full planning, and then you can easily make more money. But certainly you need a right team and right education before you get involved into those things. So that's one. And the second one, somebody asked about what are the things I need to look into when we buy leasehold properties or consulting, or what cautions we need to look at. So, I mean, when you're buying a leasehold properties, because, like, especially in London and Wales, most of the properties, when you're buying a flats, is sold on a leases. So you have 99 years lease, 125 years lease. So one of the important thing is to look into the term of the lease, because many times I've come across in central London, some leases are only 2 years, 3 years left. So, and you might find, oh, I'm getting a house of only £100,000 in central London, but then also look into the terms of the lease. Also, many other covenants. Some lease have onerous covenant that you need to always, fulfill during the tenure of your life. So what happens is, important thing is, read the lease is the one of the most important thing when you are buying any leasehold property, right? And also, yes, the second, I think, further question was like, can we extend the lease? Yes, certainly you can extend your lease. There are some laws around it. Even I think I've shared some of my links, so you can also check more detail on that. So I'll quickly share laws, like as long as you're holding a property for minimum of 2 years or more, or you are getting a right from the previous person who has owned it for 2 years or more, you are eligible to extend your lease by another 90 years. Having said that, now the government is also coming up with a new law, and that will allow even people to extend by 990 years. So that's even better. So likewise, I think government is always quite lenient towards the leasehold owner. And I think the question was also asking whether the landlord can, take an advantage or rip them off. But no, there is a separate tribunal for that, first tier tribunal. So landlord cannot charge anything unreasonable for a lease extension. Of course, you got to pay a compensation to them, but has to be reasonable. When there is unreasonable figure that landlord wants to charge you, you can always make an application to tribunal, and tribunal will give a fair award on whatever the right figure is for those. Of course, I've fought a lot of cases as well being a surveyor. So likewise, both landlord and the tenant hire their own surveyor. They do their own submission report, and then tribunal decides what should be the right amount for that lease extension. So I think that was the answering of one of the other questions. So now there was one more. Somebody was saying if you can explain a little bit about shared ownership. So yes, shared ownership is, imagine, like is like a share you are buying in a property. So many times this type of concept you will see when the new developer comes and then they try to sell their houses. And also this helps the first time buyer, because let's say somebody who's trying to get onto the property ladder is the best way, because you don't buy the 100% of the property. You can buy 25%, 50%, 60%. And the concept work is, let's say, for example, if the house is, or let's say the flat that you're buying, let's say worth 300,000 on a full price. So if you're buying 50% share, normally the housing association will say, okay, you pay 50% based on 300, which means 150,000. And you can certainly borrow money you don't have to pay the full 150. You can borrow money based on that 50% share in the property. And for the remaining 50%, you pay a rent, something called rent for the remaining. They will set that rent as well in advance. That, for example, if the whole flat rent was, let's say, £1,000 per month, you only owning 50%. So you're paying only 500 as a rent, and this goes in certain RPI, retail price index, or they have a certain way of reviewing that rent. And then you have a chance to, it's called staircasing valuation that we do as well for a client. When we do a staircasing valuation, you can buy the remaining 50%. You have a right to buy that in a later on in future. So you can simply buy like 20% now, 50% now, then 50%, 25% after, and then slowly you can complete the whole 100%, and you become the owner of 100% of that property. So that's how the shared ownership works. And okay, there was one question where saying, is it good to buy properties in a limited company? Yes, I mean, certainly, you need to look. I mean, of course, these are many things that you need to consider before you starting investing. One is like which tax bracket you are in, right? If you're only on a low tax bracket and you're only buying one or two properties, it could be okay. So you need to ask yourself, but then if by buying those extra property, that rental income can push you into the higher bracket, then it's better you buy in a limited company, or if you already own it. So these are like complete separate advice, which you can also sit with your accountant, or maybe one of the time, if you're joining one of our workshop, we can also go and review your portfolio. So then you need to look at it, where do I stand, right? And then if you already have something and you're looking to restructure, there is a way you can set up LLP. And there are some smart people who create trust. Like imagine now, I'll give you example, Grosvenor's Trust. If you know, like the Central London properties, these people come from Lord families and all. They are on the third generation now. Imagine inherent tax, which is 40%. If every time you pass a property portfolio to the next generation, you pay 40%, what would they be left with? But what they've smartly done, and that is why all this new legislation comes, what they've done is that created trust. So only the controller changes, the asset still remains in that company. Same thing can also happen, whether you create trust, LLP, limited company. So various options which are available. So you simply change the control, and company gives you a lot of flexibility. You can get more partners in it. You can you can basically sell this part of the share to somebody if you want to raise fund or change it. So you don't have to really every time go to land registry and change every partner that comes in and goes out. No, you just simply go to company house and then change those details from there. So company can be a good option, but I won't say this is the only option. You may have other options which you may preferably like to explore by sitting with your accountant or somebody who's professional. And like when I was sharing about those team, you need to have a team. One important thing that you need to look for, whether what solicitor I should take, what accountant, what surveyor. The person I would suggest is take the person who are invested themselves. So let's say I'm a surveyor and I'm a property investor as well. So you always go, or if I'm an accountant, then the accountant, ask the accountant, are you also property investor, because the people who have their own property portfolio will understand your question better, will be able to help you better, because they themselves are investor. Like if you go to an account, I mean, I've met sometimes different type of accountant, and sometimes some accountant does not know about many things. I mean, they may be probably doing just accounting for some retail shops, but if they're doing accounting for retail shop, they're not good for your purpose. Yeah. So ensure that you ask this right question. There are many things that we of course go through more in detail. You need to ask the right question to every professional before you select the right professional. And that is why you create a right team. The team really play a great role. As I mentioned, like if you have a right team, you can really win any game. But team is very important, and that's why over a period of time we have built our team. This team itself that we have is basically a asset for us. Now, okay, there was one question where they were saying, why would somebody give property for lease, I mean on purchase lease option, if they can rent it to themselves? Yeah, it's a very good question. So why would somebody give? Now, there are many reasons, because people have so many situations. Let's say, for example, uh, somebody gets a job in America and they are in London, right? And they work, I mean, let's say, and the employment of this is one of the best job, and then they're saying you need to but join in 2 weeks time. Can you sell your property in 2 weeks? No. Or when you go in America, would you be able to manage your property, or would you trust somebody who can manage it for you? Maybe not. You want probably some peace of mind that somebody else can look after for you in your thing. And also, not only that, there are many other financial things where people, if they sell it now, they'll end up paying a lot of money. So they try to do the deal by avoiding, and that's called like tax planning basically. So they say, okay, fine, let's say we'll do a deal. So I mean, I'll give you an example. One of the guy, he inherited almost the whole parade in Kent, and then he's every year he sells or he gives property, 2 to 3 property every year, because he wants to slowly offload his burden. If he sell everything in one go, he will end up paying a lot of money. So that's one. And also, I mean, there could be many, like people who are getting separated, partners fighting, and then divorce, and all those cases where people will feel, let somebody else take control. And maybe they are not, probably other reason is they don't really want a headache of renting it themselves. And that's why I said, you need to do, because not every landlord will be looking to do a similar deal, but you will find one out of some, and that's what you're looking to do in this in the deal. And there was some other options that where will you find deals? I mean, there are a few places that we go, and of course in more, I mean, I'll share a few now. One is, let's say when you're looking in, let's say Rightmove or Zoopla, if you find same property available for renting and also available for sale, that's the deal that shows that vendor is willing to do both. He's willing to sell and let, which means he does not really want to keep the property. I mean, whatever comes first. So those are the people will be the good one for you, who can say, okay, fine, let's say we'll do a purchase lease option. So you rent it for now and I'll buy it later. That's one. Also, you will find some property which are sitting for long and people are expecting more than what it is worth. Then those are the people who will be willing to give this kind of deal. Say, okay, fine, Mr. Vendor, you are looking for 450, but you know yourself that is not worth 450, but I'll pay you 450. But you know what? Not now, in 2 years' time. So it's a win-win for him. Is also he's getting what he wanted, and for you, within that 2 years, you can add value and do a lot of things and get some cash flow in, and then use it. So it's win-win. It's not like taking someone's advantage, but purchase lease option creates that win-win situation. Also, likewise, leafleting auctions is one of the things. A lot of time you find these properties in auction, sometimes some unsold lot or a prior to auction. So you can do a deal. We teach these things, you can buy a deal prior to auction, in the auction, and post auction. And those are some strategies, like what to use, what to tell the people. And these are actually the step-by-step thing that are really needed somebody to learn before they start implementing them. And let me see if I think some of those which I've seen here, I think I've covered most of them. Anyone's questions left, or I'll just go through quickly this chat box. Or in case if you have any following question. Yeah, I think there's one here. Some tax implication when someone have, okay, there's a question. What about tax implication when someone has another income of 80,000 and 10,000 and 100,000 pound from the salary, and rent and other income is added to the bracket. Yeah, so I mean, that's why this company will really help if you set up a company or separate entity. So that separate entity will have a separate tax implication than your personal one. So I would suggest then, you speak to accountant, find the right way of structuring your portfolio. How would you do? Of course, certainly, if you have that sort of income, I won't suggest you do it in your personal name for sure, but do it in one of those LLP, limited company, or trust you can create, depends on what your vision is going forward. What would you like to do? And because there are always pros and cons of setting each sort of legal entity, so see which one would work for you. Let me see if there are other. Vivek, do you see any other questions that I missed? I think, yeah, that we covered is better to develop property portfolio with limited company or personal account. Yeah, limited company is better for that.
I have a question.
Yes.
When you said cryptocurrency backed by real estate, what is Bitcoin? Is it not backed by anything? And are you talking about some different kind of cryptocurrency? Can you please?
Yes. So there are basically various type of cryptocurrency. Bitcoin is something which is based on blockchain. There's no asset. So tomorrow, if Bitcoin goes completely down, you can't really go after anybody and say, you know what, at least pay something for it, right? So nobody will give, because this is effectively a blockchain based, right? There are some stable coin which have some assets behind it. Some coins basically have security behind it as well. So there are basically all this cryptocurrency use the blockchain, but then some will have something behind it. They call it like pool. And then based on that, so is effectively speaking, let's say you have a company who's got a shares, and then the company is basically investing in a property. So your shares indirectly investing in a property. So when you're investing in those cryptocurrency, you're indirectly having the value, which is based on asset. So as soon as the value of the property goes up, your cryptocurrency value will go up. When the value of the property, which usually in overrun does not go down, so that means it won't go down. And then again, demand and supply is one of the things which will always play. So it will always move up and down based on whatever the people are willing to pay for that coin. So that's one of the things.
So it's relatively more safer if it is backed by property than the Bitcoin is, and the volatility will be less. Am I right in my understanding?
That's right. Yeah, that's right. It's safer and volatility is less. Even the good thing is the HMRC is also trying to use, because now what will happen? Blockchain is one of the important thing, which is the future. Whether you use cryptocurrency or not is not. Even now, HMRC is also going to create this blockchain system where you can really see your assets in that class. So I mean, there's something, of course, a separate video on it. I think on my channel you can find. So also banks are also trying to get the blockchain structure for their fiat currencies, because they love, because what happens is we are somehow trying to bridge that gap, and the blockchain is one of the way. Even a lot of contracts are happening through blockchain to save time and system.
COVID vaccine also is now moving throughout countries via blockchain technology. I don't know whether it was India or UK. I was reading the news yesterday. So blockchain is the key thing that we all have understood for every kind of transaction which is precious, be it vaccine or finances or gold or whatever. But it's good to know that. And there is another question come: can I put my property to limited company whilst on buy to let mortgage? I don't know if you can answer that.
Yes, I mean, so you can do it. There's a way. I mean, that's why I'll say you don't put directly in limited company, because if you put directly, you will end up paying stamp duty, because directly means you're effectively selling from your personal name to a limited company. I would suggest speak to an accountant. There is a way I'll give you very quickly things here. So there's a way you declare yourself as a full-time landlord. You go through a process, set up through a limit LLP first, and then you move on to the LLC. So that way you can avoid all those implications. And also you got to take a consent from the bank to transfer the loan from your personal name to the company. So you need to complete all those paperwork before you can switch. So it won't be straightforward, but you can do it. Yes.
So you can help them if they want to contact you later or through the group joining where we are entering.
Yes, yeah, you can ask them to contact us. We can discuss that.
There's another question. Is there a future for commercial properties investment? Is there still any future there?
Oh, yes. Because so the book which I've launched, of course, that's the whole reason. Now, I mean, it has become so easy, but then again, it won't last for long. So by June 2021, government will come up with some new law, but by the time you can really take a lot of advantage. And of course, there will be still some remains, but then what is now is really like you're sitting on a gold mine. Like, so you can really convert any commercial shops into anything that you desire to do. That's something else. Also, this class M. Class M is like anything behind the retail shop, you can convert as a flat under permitted development. Also, there is a law which says that now you can build two more story on top of an existing building under permitted development. So yes, commercial property is one of the good strategy to use currently, and a lot of deals you can get in commercial because a lot of retail shops are getting empty and they need to be restructured, and that's why government wants to come up with those ideas where they can incentivize people to make some good of those empty units.
Okay, so we have got 7 more minutes left before we like to close. So if somebody has got any question which is not answered, can you please type it again, because it's difficult to scroll back through. And I will ask next question. Would the Brexit changes affect the property market, Sumit?
No, but then there's something we are all expecting that after March, there will be some correction that is due. Of course, now the correction is the one side we know, of course, there is a shortage in the market, but other side we also know there is a rush, because what happens when the first lockdown happened, a lot of activities got stopped. And then people started rushing to buy property as soon as it opened up second time. And then, this law came where, stamp duty holiday came. So until 31st of March 2021, most of you people may be aware that the government announced that, if you're buying a residential property up to $500,000, if you're a first time buyer, you don't pay any stamp duty. Even if you're an investor, you don't pay stamp duty, but you still have to pay that 3% surcharge that is supposed to be paid by an investor under Section 24. So everyone is trying to get, into the property before that. But then we are not sure whether they will extend after 31st or there will be some new things will come. So the economy would need readjustment after that. So there are some researchers who are saying there will be correction after this first quarter, and then we all will watch anyways what happens.
Okay, there are 6 more questions, so give focus, sharp answers, Sumit, so that we can finish in time, hopefully. The first question is, how can Sumit and team help in sourcing and buying such undervalued good properties, as clearly most in this group will not have time even to do the course? So
right, yeah, that's right. So we have a done for you service where you've seen the other company, property solution company, which purely deal with the investor. You just tell them how much fund you want, what type of property you criteria, and then we'll find a suitable property and we'll keep sending you those lists so you can join one of our mailing list, and there you can get all the information. Like,
do you recommend any lenders?
Yes, we have also our team. So when you are, of course, working with us, we can recommend some lenders. So first thing, of course, you will speak to your high street bank because they will be the cheapest one. But if you're going on creative basis, then you need a lot of other lenders and the brokers, because on commercial properties, you will probably need anyways the creative one rather than the high street, because the high street ones are not good for commercial, I would say.
What is Section 24 for landlords?
So Section 24, basically under Financial Act, there are few clauses, two main which you need to be aware is. One is whenever you buy a whenever you buy a property, a residential properties, the second home, you will pay 3% extra stamp duty than whatever a first time buyer will pay. So let's say up to $500,000 if you buy a property, then up $500,000 if you're first time buyer, you don't pay the stamp duty. But if you are an investor, you pay 3% extra, which is £15,000. But still you are saving the first of 15 to 20,000 pounds on a tax. Second is now the Section 24 also deals with like the mortgage interest that you pay every year towards your so the interest. Let's say for example you made a income from a rental income and then you have a mortgage to set off against it. Now what government said is from 17 onwards they started reducing it down, that now you can't claim full, but you can claim up to 20%. So let's say if you're on 40% bracket, your income tax is calculated at 40%, but your interest that you're paying, you won't be classed under 40%. So effectively speaking, you will end up paying more tax on the same portfolio that you were paying less before.
Okay, and I don't understand non-high street lenders, so Mohan, may have to ask again. Next question is, what are advantages of buying with full cash?
Advantage, in my view, only thing is if you're getting a great bargain, then buy with full cash. Other than that, always use the bank's money. I mean, why would you not use bank's money if it is available so cheap? And unless your situation, of course, wants that. So, I mean, we do that. Sometimes we buy cash only when we are getting a great bargain and we have to complete quickly. And of course, if that suggests, then you buy and refinance later.
Does Sumit do package deal for BTL?
But let's see. Yes, we do some package deals as well.
Okay. What happens to flats if later that become structures not viable and has to be pulled down?
Structure, you mean structure issues, right? So that's where the surveyor role comes in play, because we say, you know, property investment is one of the biggest, largest investment that you do in your lifetime. So before you buy, you take an independent advice, hire a surveyor. There's something called home buyer survey, or there's a level 1, level 2 structure surveys under level 3. I mean, there's a separate guide on that on RSA's. You can search on Google, RSA's guide for home buyers, and then you will find what service. So if you get a report done in advance, they will flag up anything that's wrong, and you can do further investigation before you buy. And even let's say by negligence, if something goes wrong, at least the PI insurance is on the back of that report, so you can claim the money in case if they have done any negligence while they were surveying the property. So you're protected that way. And also, if some subsidence happens after, you have a property insurance, building insurance policy that covers you. So any theft, fire, subsidence, or anything that happens, that covers under the building insurance.
What are your charges for sourcing commercial property?
It depends. It varies a lot, actually, from 1% to 5%, because the more money we save you, the more fees. I mean, let's say if I'll save you 20% blue market value, you won't mind paying 5 to 10%, right? So it works that way. I mean, of course, I'm happy to discuss that later on a call or whenever they want to really go ahead. And a standard forward, set forward is 1%.
This question has come from previous one. I mean, if that flat becomes weak at a later date.
Weak structure wise, you mean, isn't it?
Yeah.
Yeah. So, I mean, if it becomes weak, first of all, we need to find two reasons. Has it been deteriorated because you did not maintain it well or neglected it? Or has it some external effect? Let's say subsidence, some tree has grown up and that has damaged, or some other. So if it is from external, then the insurance company will cover. But if you have not managed your property well, then of course it is your responsibility. Let's say, for example, if your roof is leaking because you never put any, attention or any, importance to maintain your roof. Let's say every year it needs you to clean the gutters, clean the tiles, or whatever is needed. And if you're letting it to basically deteriorate further, and the insurance company knows, let's say the roof collapsed later on because of you neglecting your obligation to maintain it, then certainly they won't cover. So you need to be very careful about maintaining your property, which is like asset, any asset, like other assets, you have to look after it well.
The returns you are quoting, Sumit, they look too good to be true. What's your comment?
Yeah, I mean, of course, they're too good to be true, because of course in real estate, what happens, like the more problem you solve, the more money you make. And we have learned over a period of time to solve those sort of problem. That's why we make money. And this is, for us, is normal. Yeah. So, I mean, for us, because we have made like this money, and you will see, this is how it happens in any real estate. When you develop something, you literally double your money in a year or whatever time, 18 months the project takes.
I don't think any more questions are there, but if there are any, please unmute yourself. And there's one more come. Do you help in finding out the good place to invest in property over the UK?
Yes. So yeah, of course that comes in.
Or I tell you, okay, this looks good to me. So will you come and check it and then approve it, and then maybe become a partnering investor with a group of people or with that individual anywhere in the country? Is it like that? Or do you find out yourself also and you offer as well, but you go with the people who approach you with which they are thinking is maybe a good opportunity too?
Yeah, we have both, different service packages. So let's say if you just want us to, come out and then, check your property that you're buying, and you need our advice on initial, we can cover anywhere. So wherever you're buying, I'll send one of my surveyor who will come down, will survey the property and give the report and feasible study what you're buying is right. So it's not just the surveying, because, as I mentioned, by qualification, I'm a surveyor. but I do a lot more than what you can expect from a surveyor. So when you are hiring us, it's not that. We'll also give you comments on this legal parts, on its value, the feasibility, what you're buying is right or not, right? And that we can do anywhere in the UK, wherever you need. And but if you want us, I mean, so the one which we source properties, we know, I know I'm in South London, so I try to go not more than 1 hour of where I am. I mean, in past I had properties in north and all. I bought properties in near Manchester, Accrington, Bolton, for our clients. But then over a period of time we have grown a lot, and then we now make more money. And so I've decided my patch, which is London, Surrey and Kent. So of course if you can join us here, but having said that, you can buy property anywhere. So we may of course come as a joint venture as well if you need us to come in and help you out. But we won't probably retain property anywhere outside this patch. We might probably flip. If it is a flip, you may develop property in Manchester. We are happy. We'll come as a joint venture partner, do the whole thing, and later on we come and take an exit.
Okay, so I think the questions have ended unless